Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 16th of December 2020, and we're expressing our view as to why silver prices have risen over $1.20 since the start of this week, and has broken through key resistance levels, and perhaps the strongest one most recently of $25, and is at the time of writing at its peak of $25.16. So let's take a look. Now, before we address why silver seems to be spiking recently, just a quick shout out to two videos we would like you to take special note of. One we produced yesterday, Will Silver Average $30 an ounce in 2021? And one produced earlier entitled Gold Price Forecast 2021, Goldman Sachs versus Capital Economics, where we see financial institutions express where they believe that gold and silver prices will move next year. Okay, back to today and this week. Firstly, we're writing this report and producing this video at 10:15 GMT. And so by the time it's published and seen by most of our supporters, much of the day will have passed and these figures may very well have changed. But let's address three key reasons why silver is on a tear at the moment. In other words, why has it risen $1.20 already this week? Now, there are many reasons for this, but the three key ones we wish to share with you are: one, the dollar value has fallen quite significantly. When we produced our gold and silver weekly update on Saturday, we could see that the dollar index stood at 90.97, down 0.72 on the week and the third or fourth consecutive weekly fall. Well, it's now standing at 90.17, so another drop of 0.8. And many are predicting it will fall into the late 80s. A weaker dollar obviously pushes up commodity prices, which are priced in dollars. The second key reason is Biden's confirmation by the Electoral College, officially making him the president-elect. Yes, Trump supporters will claim that when Congress meets in early January, it could overturn this situation. But the harsh reality is, they will not be successful in that endeavour. Now, someone will object, and there may very well be a vote. But there are now too many people on both sides of the House acknowledging Biden as the president-elect to prevent such a vote from being successful and overturning the election result. Needs a majority in both houses. They certainly will not get it in the House of Representatives, and there are enough senators now who have acknowledged Biden's position to ensure that they will not vote in favour of overturning what many call the democratic process, whether one believes there was some form of steal or not. So we're of the opinion, and have been really for some time, that that election result is set in stone. So this means that not only will a stimulus package be agreed before Christmas, but an even greater one will be likely after the 20th of January. Now, obviously, much depends on Biden's ability to persuade, particularly Congress, to release additional funds. But if he cannot achieve that, then, frankly, we could see him taking a copy out of Trump's playbook and divert funds from other projects to get his way. And he can say, after all, this is what Trump did for his wall. I'm doing this for the survival of the American people. But we suspect he may not need to do that. Now, this increasing spending, plus many other initiatives moving forward, will serve to undermine the dollar value, and therefore, of course, act as a tailwind for precious metal prices. The markets are looking ahead to this, which is why we're also seeing stock markets in the US rise at the same time. It's interesting that President Trump said that if he were to lose the election, stock markets will collapse. We believe the opposite will occur. They will actually surge. Now, they may very well collapse later, But they will surge because they will see that a Democratic president will continue to pump money into the economy, which, as we all know, will prove a short-term fix. 3. The Fed FOMC meets and reports today. Yes, after this video is published, the FOMC will report its decision on interest rates. And whilst we expect it to hold fast with the current Fed funds rate, they will no doubt speak in rather dovish terms and emphasize the need for the US government to continue with and increase its stimulus programs. It is possible that the FOMC will ease monetary policy, though, by increasing the duration of its treasury portfolio and asset purchases, or at least signalling its willingness to support the economy and asset markets. Without actually doing it, but stating that it intends to, could be enough. This will further serve to undermine the dollar value and thereby strengthen gold and silver prices. Now, there are 3 key reasons, but there are a number of other underlying reasons. For example, optimism about the various vaccine programs, meaning that it is envisaged that the COVID-19 pandemic will be controllable later in 2021. An expectation of considerable economic growth next year as economies begin to open again. Also, as the Silver Institute has reported and other mining companies have alleged, silver supply, as in mining supply, will be down due to temporary COVID-19 related closures. Plus, as demand picks up, there will be an inevitable short-term squeeze. And finally, Biden winning the election will focus on more green policies being introduced, which suggests the prospective increase in the use of silver for items such as solar panels and various forms of potential electric cars. So, as we've mentioned before, in terms of silver, ironically, a Biden presidency is more likely to see its price rise than under a Trump presidency. That's not to say for one moment it's better having a Biden presidency, but from a silver holding point of view, we can see much stronger reasons why silver is more likely to benefit under it. Now, markets look ahead, and Biden's victory yesterday should not be underestimated. That said, the Fed also looks ahead too, and whilst we feel they are more likely to be dovish than hawkish, they too will be factoring in these positive events moving forward and could possibly, now it's unlikely, but it's possible, be more hawkish than many anticipate. And if that does happen, then we will see some of the precious metal gains being reversed. Now, we should also bear in mind that towards the end of December, and certainly the start of most New Year's, precious metal prices tend to rise, and this too should be factored in. Now, in spite of this, we're still holding on to our $22 to $26 outlier prediction for silver for this week, as mentioned on Saturday. But of course, now having risen above 25, there could be quite a jump. But today will set a trend. Whatever happens today is likely to set the trend for at least the next week or so. This is why the FOMC report is so important. Now, finally, US retail sales figures have also been announced for November, in fact this morning, and they show a move into negative territory compared with October. A plus 0.3% in October, but a minus 0.4% in November. With industrial production down also from 0.9% in October to 0.4% in November, this suggests that the economy's recent recovery is failing. And this is why we're of the view the Fed will not be too hawkish today. However, they're also likely to know tomorrow's weekly jobless claims, which have worsened recently. And we shall see if the trend is still in the same direction. Now, that's it for now. And of course, we shall publish a full report on what the Fed FOMC produces either late this evening or early tomorrow morning. Meanwhile, thank you so much for listening, and please, it would be appreciated if you could share our videos with friends and colleagues, as we've noticed that in the recent 3 to 4 weeks, there's been a significant decline in viewership. And we're not sure whether that just relates to us or is common across the board. But it is, as I'm sure you'll appreciate, quite disheartening to see the result of many hours of work on our part actually only being viewed by a handful of people. Now, we know we're preaching to the converted because you're the ones watching and listening to these videos. But it would be appreciated if you could do what you can to help promote our efforts. Again, thank you for listening. If you haven't already done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And of course, not forgetting our Richard and Greg channel, to which we place a link below, where Greg and I discuss various issues of the day. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.